Hello everyone, gobble gobble, happy Thanksgiving. In today's video, I'm going to go ahead and talk about how Nvidia and the tech stocks sort of pulled down tech and how I was sort of overall bearish on tech for that reason. So without further ado, we're going to take a look at that and then, what the next steps are for the market. So we're going to take a look at the SPY, the NASDAQ, the Russell, the VIX, the bonds, the dollar, and the large tech stocks. So without further ado, let's get started with the video. So first and foremost, this is an uptrend on Nvidia. You can see this is the daily chart that we started on August 5th, and then we got a connection on the lows here, and then basically it's in an uptrend. So what I was saying was that we were going to get another move to the downside because we got two solid closes below this uptrend level. And the same applies to a move to the upside. So when we get two closes below a solid uptrend level, the third day tends to be bearish. If we have two closes above an uptrend level, then the third day tends to be bullish. And this move that we got down into Nvidia caused a lot of weakness in the overall market as a whole, and definitely caused AMD and the rest of the tech stocks to take a bit of a tumble today. And definitely, as you can see, the NASDAQ was the biggest loser today. We got a failure to break above the 618% fib and the 786% fib here from the recent highs and lows. And we are back below this 382 and 50% fib. This is not the most bullish sign heading into Thanksgiving, especially heading into the end of the year. So we can clearly see that this is a bear flag. And what we really wanted to see was the break on this bear flag above the 786% fib. The fact that we did not get that is not very bullish for tech. Now, the Russell is much more bullish. The Russell tends to be way more bullish during this time of year. It tends to outperform the overall market, the tech stocks as well. So, in my opinion, the Russell is most likely going to continue leading into the end of the year, early next year. And again, just reiterating, a lot of these garbage stocks, penny stocks, stocks with low market cap, a lot of these stocks tend to do very well during December, late December and January. Primarily because the Russell 2000, which is the 2000 crappiest stocks, essentially, the Russell 2000 tends to do well. So a lot of these other stocks get a lot of hype and momentum in them because the Russell is also green. So we can't really do much except look at the large tech stocks. So this is AMD. AMD is continuing to break down lower. Of course, AMD had to move lower primarily due to Nvidia. Google had a bit of a bounce, more so flat today, heading into Thanksgiving. Apple was also pretty flat as well. Amazon was a bit red after a big green candle like this into a level of resistance. It makes sense that we got a bit of a pullback here. Same concept on Microsoft. Large green candle. The move upward cannot sustain itself in one straight line, so it needs to have a bit of a pullback. So definitely makes sense to get a bit of a pullback here on Microsoft as well. We got two closes above this uptrend level, but the third day did not continue, primarily in my opinion because the second day that we closed was already at a major level of resistance. So we got a big chunk of this move already within a day. So that's why the third day was a bit tired. The bulls were a bit fatigued on Microsoft. Tesla had a bit of a red day, starting to break down below, and we filled the gap almost to 324.70. We had a low today of 326.59. So we're about $2 away from the gap to be filled on Tesla. And Meta had a bit of a red day. Netflix also had a bit of a flat day. So a lot of these tech stocks just ended up being flat. The big losers were Microsoft and chip stocks. So it was primarily, the move to the downside was primarily caused by Nvidia being this weak. And heading into the end of the week, right? We have seasonality. Seasonality tends to be bullish during this week. How much are we green for the week? So this is a weekly chart of the ES, and you can see that we're still green about 0.47% for the week. We're still closing above the trend lines, but on the daily chart, this was a solid red candle here. Closed right at support. On the QQQ, we also closed like right at the trend line. This is basically not that bullish, right? So on the ES and the NASDAQ, both are showing that we're closing right at the trend line. This is not the most bullish case scenario for us. Aside from that, let's take a look at the VIX. We can see the VIX is still holding support. We know that the VIX has an inverse relationship to the market. If the VIX is rising, then that is bearish for the overall market. We can see that the VIX is holding this level of support, this zone here. So we need to see if the VIX continues to hold the zone. Let's go ahead and take a look at the bonds. The bonds are continuing to finally churn upwards. This is a finally, like, the bond traders are very happy. Finally, the bonds are starting to move. And we know that the bonds also have generally a correlated relationship to the market. If the bonds rise, then the overall market should also rise. But these past few weeks, the bonds took a tumble. And what is interesting here is that the bonds tend to show strength in equities once we break and hold above major levels of resistance. So once the bonds can break above these levels, that's when I think the move to the upside is going to start permeating in the equities. Last thing I want to show you guys is the 2-year yield divided by the 10-year yield. Generally, when this starts to bounce, when this starts to rise, right, things start to become a bit more bearish in the market as a whole. Sorry, let me just show you guys the simple thing. So this is the 2-year over the 10-year, and this is a good precursor to weakness in the overall market. If the 2-year and the 10, so the red here is the SPX, right? If we start to break down lower, very dramatically, we start to really break down lower, the SPX tends to follow afterward. So this is good to monitor, because if we start to see a lot of weakness out of the yields here, then it will give a very good indication that the SPX is going to follow as well. So this is just important to look at. We could see prior times in history when the 2-year over the 10-year started to break down, it was a precursor to what was yet to come in the SPX. So it's good to monitor, and we're going to continue doing that. And yeah, to be honest, there's not really much else to look at. We saw the overall tech stocks. We saw the overall market. Now we just need to see what ends up happening into next week. Next week, we have important news. We have the Fed speaking on Wednesday. And, of course, we have Friday, the day after Thanksgiving. Market might be pretty slow. It is what it is. We'll see what happens with the market then. But until then, if you guys enjoyed the video, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys Friday. Thank you so much.